Happy Monday, everybody. I hope you had a good weekend. This week is starting off with some new and some old. Of course, the old, at least what we'll talk about from last week, is the market volatility that I've been telling you about that I've expected. It's here, and after close to a year of not having a 2% move in the S&P 500 on one day, we got a few of them last week, both directions. There is no doubt by the time this is out, we'll have reacted to the weekend of Japan's market drop and the global market sell-off. Also, by the time you see this, we may have even digested that and moved on. It remains to be seen. But remember, although this video is about the day-to-day, we are not day-to-day traders. We get a goal and we focus on it. Let's jump in. Let's recap last week. Let's preview this coming week. Today is August 5th, 2024, and this is your Monday market update. As we discussed last Monday, last week was full of catalysts, and there was a lot of talk that it was a make or break for the week. Now, not to go too far down that rabbit hole, I don't think there's much that is really make or break outside of the short term. Yes, there was important news last week, but as we discussed a lot, while it may determine what the week, month, or even quarter shows for returns, it is unlikely that any one data point will determine long-term market returns. Monday had stocks gap higher at the open, and from the recent move to rotate from Mag 7 to the rest of the 493, that took the day off. We did see some of the laggards catch some buyers, and we saw the leaders digest the gains and pull back a little bit. Overall, this was the calm before the storm, as we found out, as markets positioned for the Fed meeting, big tech earnings, and jobs, all to come that week. Stay tuned to what that's going to be about. Micro led some of the macro in the idea that Tesla was an upgrade. With an upgrade, took that stock up 5%. McDonald's outlook, and more so their reaction to the outlook, had a big move from that stock too. Did you notice, by the way, that if you're watching the Olympics, there are no McDonald's ads? Seems odd for a global name. No? Well, the CEO was asked that question, and he spoke about that on CNBC. He said that visibility is one main reason for advertising on the Olympics, and they have that already. That is their reason. Odd when so many other companies that are household names and brands make other decisions. Just interesting. Otherwise, it was pretty quiet. All three indices finished right around the flat line for the day. Stocks gapped cautiously higher on Tuesday, but those early gains were not sustainable. The Bank of Japan had a policy meeting in lockstep with the Fed. JOLTS was up, consumer confidence a bit more optimistic than expected. Markets expecting AMD and Microsoft reports after the close. As news from the Bank of Japan meeting came out midday that they were considering a 25 basis point rate hike, that did pressure markets. The Dow was up about 1/3 of 1%, but the S&P was down 2/3 of 1%, and the NASDAQ was down about 1.25%. A few notable events that did happen. On the side, remember that the 10s, 2s, remember that stuff, the bond market indicator that we talked about of the 10-year treasuries versus the 2-year, the yields. I spoke about it a lot over the last year or so. As the curve is inverted, 2 years earn more than the 10-year, and that has been historically been a recession indicator. But this has been inverted for a record 500 plus days. It is getting close to getting back to normal. In fact, this morning, it actually did flip the other way. I may bring you some more details on that soon also, so we'll wait to see about that. And last week, the 28th of July, marked 100 days until the election. And you know how all the stats keep coming out. Well, the S&P 500's average return in the 100 days leading up to a presidential election has been a gain of 1.8%, with the gains 68% of the time. Are we in normal times? We're just going to see about that. Then it happened. Stocks gapped higher again at the open on Wednesday, as better earnings from AMD helped to remind everyone that AI is something that they like. Microsoft earnings were not well received by most. The global eco data and the Fed helping by coming in as expected. The meeting and the press conference by the Fed were what the markets wanted to hear, and there are now more calls that we should surely be getting a 25 basis point cut in September. As of today, maybe even more. We'll see what happens. Although I still think it probably may not happen. Remember, I said that the Fed does not like to surprise the markets. They have telegraphed a cut, so now you can expect that it can happen now. Overall, there were some comments that, spoiler alert, are going to be worries about that later in the week, about what I keep telling you about will drive the market, growth and the slowdown in growth. By the end of the day, the Dow was up 1/4%, S&P up over 1.5%, the NASDAQ was up over 2.5%. Then on Thursday, we started to see, as Paul Harvey used to say, the rest of the story. And again, more about the economy, not only inflation. Stocks did open higher with good news from Meta after the close on Wednesday, and Qualcomm with good report also. That lasted about a minute. And then we had eco data to derail things. The ISM report hit, and the number indicated a surprise contraction of economic growth, and that then add in the troubling jobs number, and all of a sudden, bad news was not good news for the markets anymore. As I mentioned, Powell's comments that he was also worried about risks to growth, and finally, that got picked up. Overall, markets were weak across the board. The Dow was down 1.25%, the S&P was down 1.33%, giving back what it just picked up, and the Nasdaq was down almost 2.5%. By the end of the day, Thursday, we've had earnings from all but one of the Mag 7, all but NVIDIA. Here you go, video watcher participation quiz. Why is NVIDIA's earnings report so much later than all the others? Please send your answers in. We'll see if anyone gets this one. And TGIF, Friday came along and the jobs report, and it was much weaker than expected and a revision to the month prior. And as for Friday, in a week like last week, that was not only bad, but too bad to be good news. Unemployment rate was up also, and that played into the growth fear and the fear that the Fed will lower rates too slowly or too late, and they may already be too late. Stocks opened lower, and that was the mood for the day. At the open, the Dow was down at 1%, S&P down about 1.5%, the Nasdaq close to 2.5%. That was just on the open. Interesting to note that even with things heating up in the Middle East, let's hope that it does not get any worse. But the demand growth fear, otherwise known as energy demand, overpowers the fear trade of the conflict in the Middle East, and oil prices were down again. After just a week of news that is being seen as not bad as good, but bad as bad, the soft landing is not the talk of the town at this point, but by the end of the day, markets were off their lows, but not by much. The Dow was down 600 plus points, or 1.5%. It was down nearly 1,000 points at one time during the day. The S&P was down almost 2%, and the Nasdaq was down 2.5%, now in correction territory, down 10% from its high. The Dow was down almost 4% from its high, and the S&P down 5.75% from its high. So far for August, not such a great month. Dow and the S&P last week were down a bit over 2%, and the Nasdaq was down almost 3.5%. The week after jobs week is usually quiet for news, but as we can see today, not necessarily quiet in action. This week, we'll get eco data on the growth in the services sector. Last week was the manufacturing side that messed things up, and we'll get more earnings. Fed heads will be quiet. Only Goolsbee, he spoke this morning on CNBC, and we'll hear from Daly later today, and then Barkin on Thursday. We will get ISM services, and when the ISM manufacturing number hit contraction under 50, that hit markets last week. We'll also see the senior loans officers report. I like that one. Not everyone watches it, but we'll see what that comes out as. Add in the jobs report, and we'll see what the mood is like. We will see if the week stays as quiet as it is without catalysts. Obviously, it's not so quiet today. I think we could all use some quiet market days. Doesn't look like we're going to get that, certainly not to begin this week. Remember, this is all day by day, so let's stay focused on the long term, the goals and how we address them. That's not how we go in the long term. Please check out the updates on the website. Expect some research coming soon for August, and there is a new blog up. For now, keep your heads about you, stay in touch, and have a great week.